I think the healthcare sector has some really interesting implications for 2025. And as we continue our series on the various sectors and what our outlook is for the coming year, I think this is a really interesting one. It's one that we are personally a little bit more bullish on. And there's some really interesting underlying trends, some mega trends that are, pushing this sector forward. And I'd love to get into that today.
Yeah, healthcare is a really interesting one because as a whole, it's had a fairly lackluster, it's up 10% over the past 3 years. In 23, it only did, 1.3% versus the S&P that's up, in the high 20s area. So it's tough, looking at it in aggregate like that. But then you drill down, we talk about it all the time that stock selection is really important. But if you in healthcare, even more so than usual, because you look at things like Eli Lilly, which has been up tremendously versus, Moderna, for example, down over 50% last year.
Yeah, I think the dispersion in the stocks is really important. And that's why, as active investors, it's critical for us to look at the underlying fundamentals. And I think some of these companies that we're going to talk about today and some of the industries within the healthcare sector are going to lend itself more towards this megatrend. But also just taking a step back of the sector as a whole, I think there's a lot of conversations, and we've had multiple podcasts about this now, but the valuation on the market as a whole, you're talking about the S&P 500 sitting around that 22 to 23 times forward earnings valuation on it. Well, the healthcare sector is at about 17 times. So you're talking about, if you want to just look at a very basic, forward PE ratio, it's cheaper from that perspective. And to your point, returns from the last few years have been a little bit lackluster. So you got to look beneath the surface for those individual companies. But I think the sector as a whole has, some potentially some room to run here in 2025 and onward. And a lot of that is because of this huge demographic shift in the United States. And so the biggest part of that is the baby boomer generation is maturing. They're getting into their 65 plus age range when medical spending, healthcare costs really increase substantially. And it's interesting that last year we had 62 million individuals in the US over 65 in age, versus in 2010, that was only 40 million people. So that segment of the population has grown substantially. And so that's just going to mean more healthcare spend, more money going to these companies that we're looking at. And that trend's only going to continue to increase. People are living longer. So that's leading to more years spent in that 65 plus age group, which just means more medical spending and dollars going to these companies that we're going to be talking about.
Yeah, I think that's a great thing to look at, because in looking at the industry as a whole, you've seen, like I mentioned earlier, fairly anemic growth. But if you look at total healthcare spending and that kind of addressable market, healthcare spending was up 7.5% from 22 to 23. I mean, over 3 years, the whole sector's done 10% on a price return. So obviously there's more underlying growth here than we're seeing translate down into the broad level total healthcare sector. Expecting another over 5% growth for 24. All the numbers aren't out yet because, early in the year it's tough, but over 5% in 24 as well. So the sector is growing quickly, but it's just an issue of where that growth is happening. And so as we're exploring that, we're looking in a few specific places. We're looking at hospitals, at GLP-1s, at senior housing is a big one, because like you said, that population is just growing, with all of those baby boomers kind of choosing a lot of times senior housing over, what we've seen to be a very inflated housing market. Inflated right or wrong, I don't want to get into that conversation right now, but an expensive housing market nonetheless.
Absolutely. I think those are some, the critical segments, that and medical devices, which we're going to walk through all of those. But I thought it was really interesting when I was doing research for this podcast, looking at just how much of our national GDP is driven by healthcare spending. It's about, that 17, almost 18% of GDP. It goes towards healthcare spending. So it's already a substantial portion of our national budget, of individuals' budgets, especially once they get to a certain age. And that's why getting into our first group, I think hospitals is big. We're looking at these individual kind of hospital companies that are doing the care, doing the procedures for this elderly portion of our population, because as people continue to live longer, like we said, that doesn't necessarily mean that quality of life is extended so much that you're preventing medical procedures. If anything, it just means that you're living longer, and it means more medical procedures per person, on that per capita basis. So you're going to see these hospitals with greater flow, greater demand from the population, leading to increased spending, increased dollars flowing into these hospitals. And so that's why I think, as far as if you're looking for companies that are going to benefit from this megatrend, those that are owning hospital systems that are benefiting from these increase in procedures is going to be a really good place to look.
Yeah, and something interesting that isn't really making our investment case here, but just an interesting addition to it, is watching all of the artificial intelligence applications in the area. You're finding ways to better diagnose people and just better track care long term, make sure that people are on the medications they need, not taking multiple medications that may interact poorly, just all of the typical stuff hospitals do, but just doing it better with artificial intelligence systems. Something very interesting to watch. Again, I think we're in early days of all of these applications, but with all the data that we have in the healthcare space, it's a really interesting place to watch. And then moving from that back into the segment that you mentioned, medical devices, very much the same story. As people get older, you're looking at more knees, more hip replacements, along with a lot of the equipment, diagnostics, and consumables that you have in just more surgeries and more prolonging life and quality of life things that you have that we've been seeing in the market.
Yeah, I completely agree. And I think the US population continues to become more just health conscious in general. So while you are going to have more diagnostic tools needed for those, senior evaluations, you're also having a younger contingent of the population who wants to get things tested earlier, who wants to make sure their body is properly functioning, because there is this kind of longevity wave happening in the United States where people are interested in, hey, am I maintaining, my health properly? Does that mean my diet's good? Is my body functioning the way that it should? Maybe I'll get these things checked out more than I say people would have 20 years ago. And so I think that's a really interesting portion of that. And we've also seen, some of the political stuff around, RFK Jr. getting put into office. I think that's a part of the whole conversation where you have more of this focus on America's health. And so just, being in those diagnostics segments is where I think a lot of those dollars are going to flow, because you're going to need more of these diagnostic machines. And then if you're just talking about operations in general, the kind of picks and shovels of the, surgery space, whether it's the clothing the doctors are wearing or the scalpels or just the, consumable pieces of that, I think are going to be valuable to put money in the direction of those companies that are providing those kind of things.
Yeah, exactly. I mean, there are a lot of, like you said, it's interesting to see. I think is maybe the trend's over a little bit now, but it might still be continuing. I'm not super in on it, but that people are doing whole body scans where they're just getting an MRI head to toe, just to cover their bases. These are like healthy individuals who just want to make sure that they're doing what they need to be doing and, taking care of what they can take care of. And then additionally, I think something really interesting as I'm doing research on certain companies in the space is that a lot of the new Alzheimer's drugs that are very promising out there in the market require these standardized regular checkups with MRIs or CAT scans, similar, but different diagnostic tools that need like monthly or quarterly checkups to make sure everything's working correctly. And so you're taking a machine that's usually used a few times in a patient's life, perhaps, to something that they're seeing on a regular basis. So there's more and more demand, not just from a larger population, but from the new advancements that we're making in the field. So
right.
Really interesting.
And I think going hand in hand with that is the fact that the medical space when it comes to diagnostic tools is very similar to technology and say the AI chip, kind of revolution is that these technologies are progressing year over year. And so you're not just using the same diagnostic tools, those are going to have to be updated, replaced, they're being innovated. So I think it's interesting. You're not just going to have growth from a diagnostic perspective because of the population, because of more diagnostics being needed, but also because you're going to have to replace that older inventory of diagnostic tools. Medical technology continues to develop at a rapid pace. And so I think that's going to be a huge part of it. Now, the next segment you mentioned at the top of the episode is senior housing. I think this is a really interesting one. It's actually really kind of been blowing up recently because of how much demand there is and how quick this demographic shift has been. And we can kind of argue whether this is healthcare sector or real estate sector. Technically, these companies, the REITs that own the senior housing developments, are going to fall under the real estate sector. But I think for the sake of this conversation today, it makes sense. And this is really just a play on that demographic shift. Like you've got more people in that 65 plus category who want some form of care, whether that's totally managed care in home, in their senior housing development, or that's, partial assisted living. It's becoming very popular. These senior housing developments are really catering to seniors in a different kind of a way. It's not just hey, we have nurses here, but you also happen to live in this very basic apartment complex. There's a lot of amenities surrounded by these. They typically place them close to golf courses or, build their own golf courses, essentially attached to these senior living developments. So they're making it more attractive, not just for kind of an end of life living situation, but as people mature, even in the kind of 55 plus categories, typically the age cutoff that they want for these, to call them senior housing or retirement communities is probably the more appropriate term. They're making them more attractive for people to just kind of live life in their senior years. And this is a really interesting area of the market that we're paying attention to.
Yeah, I think it's really interesting to see how these communities are catering to people to make it a more compelling, option instead of, like I mentioned earlier, the housing market's very expensive. It's been, it's instead of dealing with all of that high interest rates and a tight housing market, here's an option where you can move into it. You're paying something down, but then you're just paying monthly fees to essentially rent, but also, get all of those amenities that come with it. It's proven to be a very compelling argument for a lot of these elderly people who may or may not even need these services yet, but don't want to move again down the road, don't want to deal with it. This is a great way to push that burden onto somebody else and be in a position where you're just not worrying about anything. You get to live your life and enjoy what you can enjoy.
Right. And I think the kind of final segment that we wanted to talk about on this podcast is that GLP-1 weight loss drug category. Now, this has been a pretty significant trend over recent years. I mean, if you've paid attention at all to news headlines, you've seen companies like Eli Lilly, Novo Nordisk, really at the top of these conversations. And I think this is a trend that still has some room to run.
Yeah. So these companies, this segment is definitely less related to age, but given that heart disease is the number one cause of death in America, it has a huge addressable market and very important implications. I think a lot of times we talk about the GLP-1s purely in a cosmetic, in a, maybe almost like a negative context because it's just vanity, but there is a real need for these and a lot of people that this can help with, for a lot of good, but also potentially bad for these investments if it works too well and people need less medical care, which is in all of our minds the ideal outcome. I mean, that'd be a great world if people just needed less medical care because everybody was so much healthier. I don't think we're ever going to get there, but I think they could go a long way in helping with that.
Yeah, I think the GLP-1 conversation is interesting because you do have this combination of the United States has a very overweight population. So this is obviously a very necessary drug. Diabetes is very prevalent, which these are, geared to treat that to a large extent. And then you've also got the, secondhand effects of it. You just mentioned potentially, lower medical treatments because people are healthier, because they are carrying less weight. I think it's interesting to see the kind of analyst reactions around, hey, maybe snack companies aren't as good of an investment now because people are going to be snacking less because these drugs make you want to consume less food. So it has a lot of interesting ramifications, but I think the primary point is that demand for these is still at all-time highs. You've got these companies that are really ramping up production because they just can't fulfill enough of that demand. And so I think there's still running room for these GLP-1s. Now, I also want to get into some of the areas that we want to avoid. I mean, we covered the areas that we were really focusing on, and I think that makes up a pretty good portion of the healthcare sector. But of course, we would be remiss to, not mention some of the other areas. I think one of those is health insurers that we're not as bullish on, just because of the dynamics within that industry. Health insurance rates have increased recently, but I think there's pressure back from the consumer on how high some of those health insurance rates can go. There's always headline risk whenever it comes to these health insurers, because it's a matter of, hey, maybe they're not covering this procedure, or they're not covering this medication. It just seems like they're always, getting punched at from many directions, whether it's warranted. In a lot of cases it is, or maybe not. Obviously, we've seen headline risk like the United Health healthcare CEO who was, murdered because of some of this, consternation about health insurance and things like that. So along with the headline risk, I think there's that political risk as well. You don't know what this incoming administration is going to do when it comes to a lot of the health insurance piece of things. And so we're just kind of avoiding that segment. Not to say that it, couldn't perform well this year, but I think there's just too many question marks there.
Certainly are. And along with that, biotech is one we're kind of staying away from, not because it's not a good industry. There are a lot of great success stories that come out of this segment, but it's because there's so many, they're so small and concentrated, and they are a very binary system. It's a win or lose. Oh, your drug works. Okay. Incredible returns, but that's not even 1 in 10 probably. And then the rest of them is throwing money after R&D until they run out of money. So it's kind of a moonshot area. If you are very familiar with certain ones, maybe that's a segment of interest. It's really hard to, perform the due diligence and still be confident, because there's just so much uncertainty that goes into all of it. No one knows what their next drug test is going to show. And that's make or break for a lot of these companies. So that's an area we're kind of staying out of. Good one, lots of good companies there, but just, too much uncertainty. And then along with that is some of the big pharma. A lot of these companies that did very well over COVID, they've lost that stream of business of, vaccines to the entirety of America, along with the political risk you mentioned before with the incoming administration, particularly RFK Jr. We don't, it's just an additional risk that's not being priced in. We're not being compensated for taking on that additional political and societal risk, really. So it's just the investment case isn't there right now. Certainly something to keep an eye on as the administration actually, enters the White House and starts, making some real moves. But for now, it's just, more questions than answers.
Yeah. And I think beyond the GLP-1 drugs, you've seen these pharmaceutical companies kind of lose their footing since COVID, I feel like. I mean, you had, Pfizer, Moderna really take off because of the demand for COVID vaccines. And then there was, this pushback or lack of need for COVID vaccines, and those companies really suffered because of it. So they're just kind of like trying to find their direction because so much infrastructure was put into that part of their drug production that they're kind of left with something that's just less necessary now. So it's kind of interesting seeing the dynamics there. Now, we kind of already touched on some of the risks to the healthcare sector already, but I know we mentioned this. I think the GLP-1 part is interesting because if people are healthier, then maybe they don't need as many elective procedures or don't need any necessary diagnostics or things related to diabetes or being overweight. Conversely, I think it's also interesting because GLP-1s could prolong life potentially, meaning that, as we mentioned, as people are living longer, there's more medical diagnostics, more procedures needed. So I think that's kind of a mixed bag on that one.
Yeah. Yeah. That is interesting because do you need diabetes or weight treatment, or is it you're living longer? You need a new knee, new hip, so you can go continue doing the things you love for that many more years. And then final risk that we've touched on a few of these is just the political risk. With the new administration coming in, is Medicare, Medicaid going to be touched? Is that spending going to change? That coverage going to change? And then again, with the vaccines on the big pharma, what are the implications of this incoming administration? We don't really know. We're keeping an eye on it, but it's just something to watch and see.
Definitely. And I think to kind of conclude here is that I think it's going to be a good year for the healthcare sector in the bulk of it. Still going to have to look at those individual companies, those individual industries. To repeat, I think, hospitals, medical devices, you've got senior housing and the GLP-1 drugs. I think those are kind of going to be the areas to be in, but hey, it's early in the year, so we'll just kind of see how things develop.
Yeah, exactly. Thanks, Victor.